All right, today we're jumping right into a fascinating puzzle from this quarter's earnings season. We're talking about Blackstone's Q3 results. On the surface, it looked like an absolute home run, but the market's reaction? Well, that was a total curveball. So let's dig in and figure out what's really going on.
So here's the central mystery, right? You've got Blackstone delivering these fantastic, record-breaking numbers, and then what happens? Their stock price takes a nosedive. It doesn't add up. This disconnect is exactly what we're here to unravel. What did Wall Street see that maybe the rest of us missed in the headlines?
Okay, so here's how we're going to tackle this. First, we'll look at the good stuff, those incredible headline numbers that made everyone's jaws drop. Then, we'll get into the juicy part, the really tough, skeptical questions that Wall Street analysts started asking. And finally, we'll peek into the future and see where a giant like Blackstone is placing its bets for growth.
Now, before we get into the numbers, it's crucial to understand just how big of a deal Blackstone is. I mean, we're not talking about just another big company. This is the world's largest alternative asset manager. When they make a move or when their stock moves, it sends ripples through the entire financial world. That's why everyone was watching this so closely.
So let's start with why everyone should have been celebrating. And trust me, there was a lot of good news. The numbers Blackstone put up for Q3 were, by just about any measure you can think of, absolutely stellar. And this is really the core of the puzzle.
First up, assets under management, or AUM. Basically, that's all the money they're managing for their clients. And would you look at this number? $1.24 trillion. That's trillion with a T. It's a brand new record for them, a huge 12% jump from just last year. Just a mind-boggling scale.
And it's not like they're slowing down. Get this, in just 3 months, a single quarter, they pulled in another $54 billion in fresh cash. I mean, that is a massive vote of confidence. Investors are clearly still lining up to give Blackstone their money.
Now, this one is super important for anyone who actually owns the stock. It's called distributable earnings. Think of it as the pile of cash profit that's ready to be handed out to shareholders. And it absolutely exploded, surging 50% compared to last year. We're talking a jump from about $1 per share to over $1.50. That's the kind of thing investors absolutely love to see.
So these weren't just good numbers, they were beat the experts' numbers. A total blowout. Wall Street thought they'd make around $3.1 billion in revenue, they did over $3.3. The experts predicted earnings of $1.23 a share, they delivered $1.52. I mean, they just crushed it. So let's recap. Record assets, cash flooding in, profits soaring, and they blew past all the estimates. So I have to ask again, why on earth did the stock fall?
Okay, this is where the plot thickens. You know, the best part of these big corporate earnings calls isn't the pre-written speech from the CEO. No way. It's the Q&A session with the analysts. As this quote says, that's when things get unscripted and you find out what's really on people's minds. And boy, did the analysts have some things on their minds this time.
So, let's dive into that Q&A. Because this is where that beautiful, shiny picture of success started to get a little cloudy. The analysts weren't just celebrating. They started poking around, asking about the risks, the potential problems hiding just below the surface.
And their questions really boiled down to 4 big worries. Number 1, is that giant private credit portfolio actually safe? Number 2, this whole data center boom, is it a bubble? Number 3, what about all the new competition popping up? And finally, okay, you're huge, but how do you keep growing? Let's tackle that first one, because it's a biggie. All right, so private credit. This has been an absolute goldmine for firms like Blackstone. Instead of a company going to a traditional bank for a loan, they go to Blackstone. It's a $1.7 trillion market. But lately, there's been some nervousness. People are seeing defaults elsewhere and wondering, hey, is this whole thing built on a house of cards? So the analyst wanted to know, how risky is your slice of the pie?
And Blackstone's president, John Gray, he came out swinging. He basically said, look, those defaults you're reading about, not us. That's not our business. He really hammered home that they're super careful, that most of their loans are senior secured. What does that mean? It means if things go south, they are the first ones in line to get their money back. He painted a picture of a very safe, very secure portfolio.
Okay, let's move on to the next big worry. Data centers. Blackstone has bet the farm on these things, pouring billions into building the physical backbone of the AI revolution. But, Wall Street, they see a hot trend and they immediately start whispering the word bubble. Is this just another hype train about to go off the rails?
And again, John Gray's response was a firm no. He argued this isn't some speculative craze. This is a fundamental shift, powered by AI, that's going to last for years. He pointed out that they're not just building these things and hoping someone shows up. They have long-term leases locked in with some of the biggest, most stable tech companies in the world. Their argument is simple. This isn't a bubble, it's bedrock.
All right, so after playing defense on credit and data centers, the focus shifted. The analysts basically asked, okay, great, but you're already a giant. How does a company this massive keep growing? Where does the next $1 trillion come from?
And they had an answer ready. Management laid out this 4-part game plan. First, the Holy Grail, cracking into the 401k market. Imagine getting a piece of every retirement plan. That's a huge prize. Second, they're going global, pushing hard to win over wealthy individuals, especially in places like Japan. They're also betting on a comeback in specific types of real estate, like logistics. And finally, they're rolling out new products designed specifically for financial advisors to sell to their clients.
And to cap it all off, you have this quote from the CEO himself, Steven Schwartzman. He's not talking about these things as maybes or hopes. He's calling them leading platforms that are already in place. The message they're sending is crystal clear. Hey, those amazing numbers you saw, that wasn't luck. That's the result of a plan we've been building for years, and we're just getting started.
So that brings us full circle, back to the big puzzle. On one hand, you have Blackstone, firing on all cylinders, posting incredible numbers. On the other, you have a nervous Wall Street, worried about hidden risks in credit and a potential bubble in data centers. Management gave a strong defense and a clear roadmap for the future. So what's the real story here? Is the market right to be cautious, or is this one of those moments where fear creates a massive opportunity? That, right there, is the billion-dollar question.